Hello, everyone, and thank you for joining us today. My name is Kelsey Lefebvre. Welcome to the 2026 Maple Outlook webinar. Before we get started, I'd like to offer a few technology tips to keep in mind while you're viewing today's webinar. First, all attendees are muted throughout the presentation. Once in a while, it's a good idea to tap your mouse so your screen does not go to sleep during the presentation. There will be time for questions and answers at the end of the presentation. Questions can be submitted at any point during the presentation by clicking the question mark button on the right side of your screen. And then today, and presentation materials will be available at farmcrediteast.com as well as on our YouTube channel. And then lastly, a quick disclaimer that this information is presented in good faith and is not intended for investment, tax, or legal advice. And today we have Extension Associate Professor at the University of Vermont, Mark Cannella, providing a Maple outlook for the year ahead. I'll now hand it over to Mark.
Right. Good morning, good afternoon, everyone. Mark Cannella here, University of Vermont Extension. I will do a couple clicks to make sure we're set. And it looks like we're good to go. So if anyone wants to just hit the chat if it's not working. Otherwise, it looks like we are set. So Mark Cannella, UVM Extension. I appreciate that disclaimer. I don't want to disqualify any of my remarks or data over the next hour, but I do my best here. I'm in an extension role, farm business management role. Pleased to work with a lot of maple producers, privileged to work with a lot of maple business owners that share information, share financial records, or share insights about what they see and what they observe. I feel like my role is to try to convey some of the trends I've seen, try to share some of the things that I think are relevant. And then also, I really just like to start by acknowledging that there's so many different business owners and so many different positions within the maple industry that I really defer back to my role in extension as someone who's observing what's going on and trying to find a way to add some value for people making decisions and just recognizing that some of the stuff I'll talk about may not relate to your experience or the decisions you make, but hopefully, across the audience, someone's getting something, and that's the hope. So I'm going to share with you, I'll advance some slides here. Hopefully. Great. If you've got any comments, I think what I'll do is probably talk for 35, 40 minutes at least. If you've got comments or questions, I think you're available to hit like a chat box. I don't believe we're going to stop as we go, but that's a great way to park a question or a comment until we get to it. So please feel free to do that. This is a new format for me, but it looks like there's a little bit of like a question prompt up there on the top ribbon, top right-hand side. So I'm actually going to give a little bit of an overview of a few projects happening that I'm involved in from the applied research perspective. Then I'm going to here at UVM. Then I'm going to share some industry overview, some trends. This is a hit list today. Talk about production prices, policy. Yeah, there's some policy stuff happening. I don't know. There's some politics happening to be determined if there's policy. Maybe we'll touch on that a bit. Also, a little bit about consumers and market channels, and then I'm going to share a couple thoughts I have moving forward, and I'd hope to leave it there with the outlook and maybe give people the opportunity to share some of their own insights or their own thoughts towards the end. For those of you that are actually maple producers, business owners, and/or technical assistance providers, I want to make sure you're aware of our Maple Manager website. It's been active since about 2019. We're continually adding a few resources every year. So the link there is at the bottom, www.maplemanager.org. We've got a couple business tools. I'll just give you a preview. And then we've got a growing Maple business library. I just pulled a sample there. We've got some business planning, teaching aids, more for like workshops and consultative guidance. We've got some legal documents that have been getting good traction, especially the lease resources, lease templates that we've got available. And then we've got a couple of different calculators. I think I've got a screenshot of those I'll share. Yeah, here's a couple of the calculators that I think are great. If any of you are just trying to do some forecasting, if any of you are in education like I am, working with clients, lending community, capital provision, pricing, sales forecast, SAP pricing, budget, cost analysis, basic stuff, but a place for people to park some numbers. And if you're in advising, it's a way to, I think, often to facilitate conversations. Sometimes deeper strategic planning happens just by going through and doing the cost forecast and talking about if stuff goes up or down. This is just going to talk about a couple research projects that are happening. So about 2021, I was asked to work with the International Maple Syrup Institute Market Development Committee, and the charge of the committee was to research, advise, or recommend a framework for U.S. producers to contribute to a self-funded representative body to advance generic promotion. Those of you in the ag community will say this sounds a lot like checkoffs. Yeah, checkoffs, one of the options. Research and promotion boards, market orders I call that on the government sanction side. And then everything from co-ops and other private, voluntary, nonprofit organizations are part of this process. But the goal was to really start to talk within the maple community and to understand what's the level of acceptance or interest in some sort of representative body that would be funded in some way by producers. Just a couple examples of some things that are currently present across the U.S. There is a National Honey Board, popcorn. There's a popcorn promotion board, smaller industry, but a collective promotion activity there. And then especially folks in the Northeast and Vermont familiar with Agrimark, as on the private side, a cooperative entity that advances the interest of its members. So we've been looking into that. Just really going to report really briefly that did a lot of interviews in the past 2 years, and we actually have an active maple producer survey. So there'll be some results coming up in 2026 to provide an overview of what the national maple producer population said about their interest or acceptance in that type of concept, that type of framework. If it works right now, I'm going to go into the chat box. If you are a maple producer and you've seen the survey and haven't completed it or haven't seen it, I am going to add a link. And Kelsey, if you're behind the scenes too, I'm not sure if that will show up for everyone or if you could make it show up, but I've put that there in the link. That is for maple producers, not for industry members or providers. So if you see that and you're a maple producer, we'd love it. We're going to have the survey open for about 2 more weeks. We're just doing the tail end of collection in a couple of states that had some events and meetings the past week and a half, and we're going to let some surveys come in online. If you're in the industry, though, however, and you think there's maybe some people that you work with, some clients or networks that haven't seen it, and you could share that link, please do. These surveys are representative only based on participation, right? And the more participation, the better job we can do in reflecting the interest of the community. Okay, so collective promotion, and then just another thing, some of you have seen me talking. We've had the ability to do some consumer demand projects in the past 2 years. We are in process right now launching a survey that will hit consumers, adults in households in Texas and California. Many of you have seen me present on some of the results for the Vermont survey. Similar survey has been done in Ohio, which is another production region, but we don't have the analysis back from Ohio State. That should be coming in 2026. And then the 2 new surveys in Texas and California may see some preliminary results by this coming winter, late 2026 into 2027. And there's a variety of questions in those surveys. One of the focuses that I have is trying to explore the concept of environmental benefits, environmental features, and how that resonates with consumers in the production regions like Vermont and Ohio. And then comparatively, if we were moved to Texas and California, what are some of the consumer preferences around those those, we'll call them process-based features. And we've heard this from the maple community. There's some maple community members that, have questions about climate-friendly practices, and does that feature, if it were made as a claim or some sort of validated practice, would that resonate with consumers? Would that help move product? Obviously, people are interested to know if those features could possibly add value to the product. So that's the goal. That's the goal of our work, and you should see some more results coming later this year. I'll shift to some industry trends. Been tracking this for a little while here. Some of you are familiar with the color coding, but I'll go through it again. We've got two different data points here for current maple production and productive capacity via taps. This is US production only. We're not including Canada here. The blue bars are the number of taps in the US, and you can see that number steadily going up over the past 20 years, starting in 2002. You also see some plateaus there, and we could talk or think about some of that. And we're sort of kind of like, seems like we're sort of similar to last year, hovering around 17 million taps. I know there's some people on this call that probably sell equipment and they feel like that number is underestimated. We've heard that. We probably acknowledge that, and we can have that conversation as well about, the trend is to go up or to maybe have some moments where it flattens a little bit, but the magnitudes may not be perfect. Looking at US production, again, going back 20 years, we see the huge bump. Prices really started to increase. We had some moments in 2008, 2009, and you can see that black line with the orange production spots going up and up. We see the volatility. Maple syrup still a weather-sensitive crop, despite some of the great technology that's helped to moderate that volatility. But we can see the ups and downs, and based on statistics, at least, we think we're still hovering around 6 million gallons produced in the US. And or looking at the flatness, maybe the number's higher, but maybe not a dramatic change from 2024 into the spring of 2025 crop that we're still working off of. It's a little fuzzy here. One of my colleagues, Dr. Chimbin Wang, produced this a few years ago. So this goes back, the last data on this, I think, is 2022, 2023. I just want to put the US production in scope with Canadian production. So if you look at this chart, runs on the bottom from 1992 to, let's call it 2023. The blue mass is the volume of Canadian syrup documented and reported in statistical reports. And then the orange is the US. So we've got a dramatically growing crop here in the US, still acknowledging that really probably under 30% of the global supply is coming from the US. 70-75% at least is still coming from Canada, primarily Quebec. Not a problem, just the way it is. This number is getting old. 2019. Interesting part about studying and working with an industry like maple is we don't have all the information that other commodities or specialty crops may have. The last reported import-export dynamics that I can find from the USDA is 2019, and it says that if you look at 100% of US maple consumption, 66% of that needs to be imported from Canada, and only about 34-35% is domestically produced. It's possible that that number has gone up a little bit, maybe 60-40. I'm not sure if 55-45 would be possible. I'm going to guess it's up a little bit given the US production, and knowing that Quebec has done quite a good job maybe starting to diversify their markets, as I understand, away from the US only. Probably not going to spend too much time talking about international trade between other nations, other than to say, again, as an academic, as someone that doesn't sell syrup, my understanding is that the US has not negotiated or maintained multilateral or other international trade agreements that would allow our syrup to be competitive. Canada has negotiated a few different agreements across different parts of the globe, and probably better positioned to export syrup from a price perspective, at least. And the US has not maintained those types of relationships, which I think opens an opportunity for Quebec syrup to move to different places in the globe. And it also in some ways focuses and or constrains the US industry to pretty much focus on domestic demand as the way to move that crop that's going up and up every year. But without a doubt, US producers doing a great job growing, but isn't enough to satisfy the full demand within the country. This is another schematic that I put together over the past year, trying to just talk/study a little bit how pricing within the industry works. So if you notice, these are all kind of within industry, and this doesn't really acknowledge some of the macroeconomic context like interest rates or inflation, certainly a factor. But we know that the PPAQ, the Quebec Maple Producers Association, has done a great job convening its members and discerning its own interests. They work on price setting, and with over 70% of the syrup on the globe, they've got quite a bit of pricing power. So I gave them a pretty large arrow. We have certainly a number of dedicated and committed large maple sellers and distributors in this country. It's not an enormous number, so we do know that it can be probably counted on a couple hands and maybe a couple feet. So we have a smaller number of very large sellers in the U.S. that certainly set prices and indicate what they can pay and signal that through the channel for producers that are putting their syrup in barrels and need to find someone else to process, package, and move that syrup. Instrumental in probably what I'm going to guess is 75 to 80% of U.S. domestic syrup is moving through those small number of committed processors and sellers. So an essential part of the system with some pricing power, but also subject to the constraints of Canadian syrup being imported to the U.S. Often, price competitive challenge there. And then on the left-hand side, this just an indication that there's a large number of smaller producers and a couple larger producers in the U.S. that are doing direct marketing. I'd say call them more of price makers, right? Doing their own marketing, doing their own promotions, doing their own communications, and in essence, setting their own prices. Possibly got some impact, but as you've heard me talk before, we've got kind of two worlds of maple here. We've got the commodity standardized process of large drums moving into consolidated processing and marketing companies. And my guess is they move 3/4 plus of the nation's syrup. We don't have public information on that. That's best I can tell. And then we've got thousands and thousands of producers at the smaller scale that definitely have an impact on their community. They've got viable, hopefully, small businesses, and they're setting prices locally, but in the sense of volume, it's going to be a much smaller percentage of the national totals. So that just puts it in scope here, and then advance through some of the dynamics. Watching currency rates, as I mentioned, that Canadian syrup certainly coming over the border. It's necessary to satisfy the U.S. demand, and the U.S. Canadian currency exchange rate has a big factor, or is a big factor. Right now, rates have been hovering 138, 139. Past couple weeks, I've been watching it in anticipation of talking to you all. That's a higher differential, and it puts some serious price pressure on the U.S. sellers to compete with that Canadian syrup coming across. So this table here, this is in the report as well. Just going to go through it and indicate kind of going into column 2 there, PPAQ amber. They do peg their rates. It was 333, and right now, gosh, I've lost my number. I think they're forecasting, and I don't know if it's set yet, but I believe it's a 1.16. Just want to get it right. 1.6% price increase that they've got set into their formula. So that 333 last year, theoretically for an amber grade, would be 338 Canadian. And these are some of the factors. We know that the Quebec inventory has been getting lower since the fall. A lot of that syrup that's in inventory apparently is organic syrup. So that's kind of 2025 look. And then moving to 2026, I've got a question mark on the price, and I thought I'd share with you some of the thoughts, some of the pieces of information I pick up from talking to people. And I'm qualifying all this with, I'm an extension farm business specialist. I work with maple producers and try to follow the industry. It's a small industry, so we know all the topics, but we're not necessarily in the weeds with all the decision making. So I asked myself, what's going to drive currency in 2026? What would make the Canadian dollar strengthen, which would shrink the differential, which would in a sense start to maybe rebalance or reduce some of that cost competitiveness of syrup flowing across just on strictly on currency exchange benefits. So to shrink the differential, U.S. Fed is signaling potential rate cuts. There's some politics involved in this. There are some rate cuts. That's going to help shrink the differential. If the trade relations stabilize a little bit, that's got the potential to shrink the differential, help kind of shore up some of the value in the Canadian dollar and the sentiment around it. Moving down to the bottom, what are the things that could actually weaken the Canadian dollar, maintain or even possibly enhance this high differential that we're currently experiencing. If the oil prices market for global oil declines, that's not going to help the Canadian dollar, so the differential could be maintained. If the U.S. economy rallies at a faster rate than the Canadian economy, that's another thing that could strengthen the U.S. dollar and then prevent sort of a closer equalization. So there's some currency drivers. Again, we're trying to think forward. I'm not a professional in this, but I want to at least put some information out there and let some of you think about how it impacts you. I looked into some of the bank forecasts for 2026. The ratio right now, 139, that's the top bullet. There's some futures for June that are still hovering high, like second quarter 2026, 138. The reciprocal of that would be 72 cents, 73 cents. If you flip US versus Canada versus Canada to US. Looking at TD Bank, by quarter three, quarter four, they're projecting sort of an easing of the differential down to 135-ish. These are forecasts. Scotiabank, looking into late 2026, is saying 133. Okay, so these are more points of information. What does this mean for the outlook? I pulled the crystal ball out here again as an extension person, and then let's go back to that qualifier that came at the first slide here. I think these are the factors. A couple big factors, right? We don't trade maple like we trade corn or soybeans. We don't have dozens of nations and different cycles of harvest and inventory going on. So some of this, I think, is really relevant. Of the currency exchange rate now is different than it may be in quarter three, quarter four. And certainly from a producer perspective and a buyer perspective, we got to talk about flow. The crop's going to start coming out of the field probably in the next 8 to 10 weeks, maybe 4 to 6 weeks. And then the pace that this crop is sold and moved may have an impact on the price. So I put together a couple scenarios. 2026 scenario A, PPAQ price is set theoretically. Let's just say that the value of oil goes down, the U.S. economy rallies, and we have a strong crop, ample supply. My general crystal ball is maybe U.S. producers could be expecting 240, 245. Some of you lenders on the call, or you're starting to do your repayment forecast and cash flows. Possible number. I'm not a maple buyer, so don't say this is set in stone. But I want to get the comparative out there, like 2026 scenario B. So PPAQ price is set. Let's say the banks get it right. Let's say that the differential does decline later in the year. It's probably not till quarter three, quarter four. And let's say there's an average crop. An average crop is about average. It's about equal to what we've got. In a minute, we'll start looking at some of the market growth slides, and we know that the market appears to be growing. So average probably isn't, maybe enough with the strategic reserve in Quebec, but average isn't necessarily as much as that's going to keep, is going to possibly create some more demand, I guess what I'm trying to say. So these are all scenarios, just trying to put some ranges out there. If we did the currency differential based on 133 later in the year, we could be looking at 245, 250, maybe, but that's also later in the year. So producers have to kind of qualify their relationships with their buyers and how we want that syrup to move from the field into the market channel in a way that keeps everybody happy. We've been doing some looking at price series over the past several years, trying to peel away from the nominal prices that producers receive. We know it's real. We know cash flow management is a very real issue, but trying to look outward a little bit at the industry and understand how the industry has been, what the conditions have been for the industry. So these two lines, we've got the blue nominal retail price, which would be the cash price, average cash price received by U.S. producers. This is not retail in the grocery stores. This is the retail price received by producers, farm gate, if they're selling directly. Time frame 2000 to 2024. The left-hand axis is price per gallon equivalent. And I peg this on producer price index, which is generally reflective of agricultural prices. So this chart is trying to tell us, how is the inflation adjusted price, the real retail in orange, reflective in the increased cost of productions over the time frame? Indexed at around 2000, use a 2005 reference year. And we could see that producers have by and large been increasing cash prices somewhat consistently. That's the blue line charting upwards up to 2024, just about $60 per gallon on average. This is per gallon equivalent, not necessarily 1 gallon of syrup, but this is if everyone's crop gets reported to the USDA annual survey and they say, I've got this many containers at this size, at this price, I've got this many half gallons, got this many quarts, this many pints. Average $60 per gallon. Cannella doesn't like that. Cannella thinks that's a low number. Now we'll talk about it in a second. But compare the blue to the orange. So when we do the inflation adjustment to get the real retail in orange, we can see that compared to 2000, our orange line is below where it was. 2024 compared to 2000, the orange line is below. Let's look at 2008, 2009 there, because we know we had some pretty strong global syrup prices, at least barrel prices, bulk prices were high, 2009, 2010. Retail prices came up and then came back down again. For reference here, I do some business planning with producers. I just want to note that for folks that are selling, say, $10 a pint, that's about $80 per gallon equivalent. Pretty common in Vermont right now. Or if you go online, you'll probably see maybe $14, $15 per pint. That's $120 gallon equivalent. And that's a good reference point for people thinking about their marketing plans, right? I don't really like $60 for retail. Done cost of production research. We found that people selling directly, whether it's farmers markets or online at the producer scale, maybe 3,000 taps to 10,000 taps. We've run their numbers. We found their cost of production is around $85, $90 per gallon equivalent, which puts a heavier emphasis on the small package sizes. And that means that you got to have a lot of package sizes selling for well over $100, $120 per gallon equivalent to balance out if you're doing any selling of, let's say, quarts or half gallons that are going to be at a lower rate. So it's on the retail side. Let's just a similar analysis, look at bulk prices. Numbers look a weird on the bottom. Same time frame, 2000 to 2024 on the bottom, and then we've got our U.S. bulk syrup prices as reported through NAS statistics in U.S. dollars. Same thing, 2005 reference year, so you can see the lines converge, and then you can see that the prices have gone up nominally. 2008, 2009, you can see those strong prices reported, upwards of almost $3 a gallon, average across the U.S. I know some were higher, some were lower. And then you can see sort of a slight decline. We're just kind of following the blue line, then it pops back up again. And this is where we're hovering, right? Average around $2.50 a gallon. Going back to our crystal ball, we're somewhere around that without getting into premiums here. These are non-organic, generally non-organic prices, no premiums. This would be like an average price. And then we look at the orange line, same differential, same producer price index. So there's no distinction here between the gap with the retail line. This is not to say that retail or bulk is adjusted differently. It's adjusted exactly the same. But we look at the orange line, and I think we've got some evidence to say that that orange line in 2024 is lower than it was in 2000, which in some ways I think is not rocket science. It's not revelatory. It's just validating that producers are saying, yeah, seems like it's a little tight. Seems like a little tight. Maple markets have grown dramatically, and the prices received is not necessarily better than it maybe could have been 20 years ago when you factor in costs. That's not 100% of the story, but that, the part of the story is, yeah, it is tight. Prices are not necessarily increasing on an inflation adjusted rate the way that producers might like to see it. Could be the level that the market is wanting to see it to allow this volume of syrup to flow. So shifting a little bit to the reasons and implications. Just want to reemphasize the differential is identical between those two charts. It's 53% spread between nominal and real on the last year of both of those charts because the index is the same. What are the implications? It's not all worry, right? Like US production has dramatically gone up from a yield perspective and from an efficiency perspective. So the cost of production per unit of syrup today is not necessarily the same as the cost of production relatively 20 years ago. So we do have to factor that in. There are producers that have implemented technologies, they've increased their yields, and they can, in effect, produce lower cost syrup than 20 years ago. So we have to acknowledge that. I think the other major implication for me is sort of this dynamic of the two worlds of maple you've heard me talk about. And this is like, when do the major markets, like the bulk markets and the minor markets, all those independent producer price maker markets converge? And I'm pretty convinced at this point that those are pretty, not unrelated, but somewhat independent markets, that large producers or producers putting syrup into barrels, selling to the bulk markets, are operating within a certain market condition. PPAQ has pricing influence, the national market demand has an influence, and that's that world. I'm aware of thousands of other maple producers that are making their own markets, setting their own prices, probably putting in a lot of unpaid labor for the marketing side of the business that may not all be returned. But they're also telling me they're selling out of syrup, and they're telling me that 10% price increase possibly isn't constraining their ability to sell. So that's great. But those are two drastically different worlds. And my understanding is that we still got 75–80% of the US syrup crop that's moving through the major markets under that sort of industry, currency, domestic demand perspective. And then we've got the minor markets and the smaller producers comparatively. And those are two different worlds. And I just want to acknowledge that people are going to have different perspectives on this. And I think it's probably important to know what world you're in. And then the question is, are these worlds really going to converge? And I think they converge in ways other than price and demand, maybe more on quality and maybe industry cohesion. But I think that's a factor/implication here. I decided to take these numbers and just look at them a little differently. People in other industries often talk about trends. Dairy industries had trends, ups and downs, supply demand balance, imbalance. I'm not going to tell you that this is like good as gold, but I did take the changes in real prices, not nominal, the changes in real prices to try to figure out if there was any trend. And I put 5-year averages together starting in 2000. So the 5-year, it's like 2000, 2001, 2002, 2003, 2004. That's a 5-year bundle. The chart just gave me 2003 as the peg point. So we got 5-year intervals here. And I put the change in real prices there, and I thought it was notable. The 5-year trend from 2000 to 2005 was an average negative change in real price, meaning the real price was going down. 2005 through 2009, it flipped. It was positive. And you can see the different market channels there. It's slightly different results based on the available information from the USDA NASH reports. Next 5-year interval, down again. Not down at like 1%, down at 5%. So something's shifting. Next 5-year interval, 2018 as the kind of the peg year there within that interval, up again, up at slightly less levels if you look at bulk, close to zero. And then the last cycle is not quite, I think it's a 4-year interval, and we're down modestly. I don't know what to make of that other than to say I intend to try to check this again or try to mix up the year bundles a little bit. But up and down, right? Maybe we just sort of try to understand the cycles here between not nominal prices, but real prices. And then this is kind of what producers maybe don't register in their checking account, but they feel it because we're kind of mixing a lot of different methods to get to inflation adjustments. So is there evidence of a cyclical trend? I don't really know. There's a lot of factors here that kind of confound the analysis. We've got interest rates, we've got expansion rates, we've got demand growing at different rates, we've got the bump from COVID, and we've got some disruption from COVID. We've got structural inflation with consumers, and then we also have production volatility, right? We know nationally we've been going up. We still see some bumps on the national trend, but we know individually producers are going to have volatility. So I'm not really willing to stamp there being a 5-year inflation trend for maple. But I think it's something to think about. It's something to reflect on, especially when people say things are tight, to try to find some evidence to validate that, you're not crazy. You're not mismanaging your money. Like maybe that dollar just doesn't go as far for buying your inputs as it did in the last cycle. And then maybe there's going to be periods of time, if we can identify them, where it is going to go far. And I think from a business management perspective, then we start talking about some strategies to recognize you're in the good times, and what do we do with that money? Can we retain some earnings, put some reserve funds out there, maybe have to catch up on some depletion from the last cycle if needed. All right, now we're going to shift a little bit to some market growth. Been working on this for a few years, trying to find a way to get information from the different sellers out there, to respect people's privacy, but also try to get some good content to talk about. So this was the first year, created a panel. Some of you listening today may be on that panel. We sent an email out to nominees. We had about 25 or 30 people that were nominated across the industry, saying this is a person that's got good information that could help us understand what's going on. So we sent that out. I think I received almost 20 responses this year, and I'm going to report what I was able to get from those. So market growth in 2025, looking back by market channel. Direct to consumers in person. This is people with stores or people coming, or farmers markets. Online is going to be the next slide, okay? So we had a few people that responded to this one that said, this is my primary market channel. And they said in 2025, they were up 8 to 10%. I want to recognize it's a small part of the national volume. This is not where 80% of the syrup goes, but it's a significant part of small business activity in our rural communities. So it's not to be discredited at all. And we've got people that are successfully growing at 8 or 10%. That's good to know. And I think that holds promise for some businesses out there. Okay, next market channel, direct to consumer online shipping. This is a combination of small and some very large operations that are moving syrup. I saw really mixed responses. I saw some below 5%. I saw some over 10. So I'm just going to peg it, and I looked at all of them at around 4 to 5% growth. Definitely a lower growth rate compared to the in-person direct people that reported. This is a small sample. This is not thousands and thousands of responses, but it's an indication that direct to consumer online shipping appears to be growing in 2025, possibly not at the same rate as some of those direct channels. And then you need to qualify all of these comments that I make by volume. I'm not reporting the volumes here. Some of them I will. But we know that some of these are larger businesses, but still the national scope is not there when we look at some of these channels. None of the businesses that completed this reported regional wholesale or business to business as their primary sales. They either said I do direct in person, I do direct online, or I'm doing national distribution. Nobody indicated regional wholesale, but then I pulled the growth rates and we saw about 2 to 3% growth. So this is, I think, the lowest growth rate that was reported from the panel. And then the last one here, this is large volume national sales. All the people that reported here were over 5 million pounds. My estimate, 70, 80% of annual syrup crop sold through this channel. If you know anything different, please email me, let me know. You don't have to tell me your name, have your cousin call me, trying to get a good sense of what that distribution is. And these people all reported strong sales, 7 to 10%, a couple maybe right around 10 or 11. But an indication again, when we look at that maple chart, right? The syrup has to go somewhere, and the large volume national sellers are doing quite a job moving that crop of syrup, right? Doing quite a job moving that syrup. All right, I'm going to wrap up with a couple of comments on politics and policy, and then hopefully we'll open up for some questions and comments. Tariffs, right? We're through it. I don't know. I don't have to navigate bringing product across the borders. I don't have to navigate pallets and shipments. From talking to people, I just know that's been super unpredictable, super confusing, disappointing to sort of be kind of, I think, pulled around a little bit. So if we have comments on that, please, we'll share them when we get to the sharing point. But the tariffs, it's a real thing. And this is kind of, I think I just want to emphasize, we've got politics and we have policy. I think we've got a lot of signaling going on, and it's kind of frustrating to know if these policies are even going to stick, or if this is just politics, and there's a lot of rhetoric. It's a weird time. So tariffs have been a big thing. I want to talk a moment about Make America Healthy Again, the MAHA movement. Questionable if this is policy or if this is just politics. I don't study nutrition, so I'm not sure. There are some new dietary guidelines released in 2026. So there are formal federal government releases happening or have happened. So I encourage you all to check that. And I think we just want to think about that as part of the outlook for 2026 tactically. And then for the bigger picture, where is maple syrup positioned in the menu of sweeteners? The big concept, if you look at the guidelines, is let's start eating healthier. Let's reduce our additional sugar intake. And challenging for me to say this to a group of people that are either producing, selling, or financing maple operations, but we're producing and selling a sugar. I think a lot of us will acknowledge that it's got a cultural significance that goes past the nutritional label. But we do have to recognize that there are many Americans that have health issues, and sugar, the volume of sugar consumption can have an impact on that. So we kind of have this tension, right? How do we position maple syrup in comparison to the refined cane, refined beet sugars, the other alternative or natural sweeteners produced by plants, and then those sweeteners that are produced in chemical labs, right? Where does maple position itself in that menu? And then I asked the question, does the industry have the resources to get ahead on messaging? The Maple Producer Conference, we had a really interesting presentation in December. We had someone who studies food systems and does quite a bit of work on nutrition and sugar. And they had some somewhat sobering comments. There are the first clinical studies that I'm aware of that are happening with human beings and maple syrup have been occurring in Quebec over the past couple of years. And they've shown some results. I encourage you to look that up if you want to find some of that clinical study results. But we also heard, I think a somewhat sobering account from someone who studies sugar that sort of clarified that statistical significance in research is a little different than what would be like a clinical recommendation or a prescription from a medical professional. So again, we're sort of on this line of, is maple syrup better for you than other sugars? And it's still a sugar. So, I think what do we do with that is very much part of the outlook and opportunity / challenge for the industry is to try to figure out how does it get ahead on messaging, and then how does it sort of verify and qualify. I think would just need to be responsible efforts related to the product. So that all sounds really balanced, right? I'm extension. I'm supposed to be fair and balanced. And then, you see something like this. This was posted on social media. This was back in May. I'm just going to read a couple of terms. Raw, local honey isn't just a sweetener. It's medicine. Supports your immune system. Soothes digestion. Soothes, pretty technical term there. So just a comment, right? Like, this is politics. This is policy. I don't know what this is, but as an industry, this is, I think, part of the outlook. Is the industry prepared to deal with this? Is the messaging consistent? Is it going to be evidence-based messaging? Is it going to appear to be industry greenwashing? Those are all factors that, modern food industry has to deal with and wrestle with, and ideally, proceed with intention and get it right the first time or adapt. I think this is a real part of the outlook. This is a quiz. Does anyone know what this is? What this chart is? I don't know if you can hit the chat. Maybe you can. This is best I could find. This is an index on beet sugar prices. This isn't quite the one I wanted. Beet sugar prices, they got a high inventory. I think they had a strong crop. Looking at maybe a 30% price decline right now. And the reference documents that I'm finding, it's all commentary at this point because it's so fresh, is that this MAHA movement possibly has some legs here. You know, they're looking at declining sugar. I'm going to put general industry sugar consumption, right? Sweetened beverages have a bullseye on them right now. So additional sugars. These are all things that I think probably makes sense if we think about our household, and then if we think about our industry, it gives us a little bit of pause. So something to think about, right? I think this is a real part of the outlook. You know, is the sentiment politically or nutritionally going to change in the U.S., which is the largest buyer of maple syrup? And you know, I'm hoping that the industry can you know, harness some of its positive attributes and find a way to responsibly proceed and keep demand growing. That's my hope. So I'm going to close out what's on the horizon. I feel like every time I talk to a producer, they got something different to say. Talked to someone this week who's got a problem with red squirrels, just causing major damage and, you know, pulling their hair out, trying to figure out how to get their taps in, get their vacuums up. I've got other people that are just kind of feeling some pressure with prices. And then certainly talk to some producers that are really strong managers, strong marketers that are just doing fine. So I think we've got a mixed outlook from producers. I wouldn't be surprised if some of the expansion excitement kind of, you know, moderates again. You know, see where prices land this year, see where things end up, see where interest rates go. In the outlook, well, I'm going to skip ahead. We've got some information coming in from the survey right now, which I think will be interesting. You know, some of the comments from talking to people and the panel as well. Probably going to watch for a rebalance on the organic supply. Ironic because the inventory is rather low in Quebec. It happens to be all organic. Other comments are that possibly the supply of organic syrup has grown a little faster than the demand for moving that organic syrup nationally. We know from our local survey, the survey in Vermont, and from the survey in Ohio right now, organic's not a super strong attribute within production regions. The community members generally are more interested in origin. They want to buy syrup from their neighbors. The organic stamp doesn't lend as much credence. However, once you get out of that production region, maybe urban areas northeast, and then outside the northeast, organic's going to be valuable. But there's a concern maybe the supply's grown a little fast. And then the survey right now, spoiler because we're collecting it, but about 60% of the producers that are over 10,000 taps have expansion plans. They indicate in the next 2 or 3 years they really do want to expand more than 5 or 10% maybe. And about 3/4 of that syrup is going to be organic if they maintain certification. So I think we possibly have some dissonance there where some of the major sellers are thinking there's a little too much organic syrup. And then some of the larger producers are planning on expansion, which could possibly, again, if they're large producers, could have a significant impact on more organic supply. So I think that's something to watch. And I guess my crystal ball, if I got it out, would be we may see some adjustments in organic price premiums this year, next year. It depends on yield. All again, just to try to rebalance and get that production growth in balance with where the markets are. That's it. It's the blank slide. That's the thinking slide.
Okay, thank you. We do have a few questions. So first, does the relatively higher inventory of organic syrup at the PPAQ potentially foreshadow a lower organic premium for the 2026 crop? Kind of touched on this a little, but
that's a great question. As someone who doesn't sell syrup and negotiate those kind of larger contracts, I can't really tell you that. Yeah, I think that the inventory there is, I'm gonna guess it's an indication that inventory has not moved as much as the non-organic supply. But what I can't really tell you is the distinction between that PPAQ holding organic syrup inventory and then the private inventories of the major packers here in the US. So great question. I have the same question. Don't have an answer. And if you,
Okay.
I can't see the questions on my end, so if you could read them, I think
Yep.
that's the way we do it would be great.
Yep. And then we have a couple questions on tariffs. So the first one is more specifically, are there tariffs just for maple syrup? Or is it more about maple supplies and
Oh,
equipment?
yeah, hold on, I'm just gonna stop the share. Yeah, at this point, my understanding is the syrup has the physical, the fluid syrup, the food has not been tariffed. Um, and I'll be honest, it may be in the next several months. I'm going to guess if maple syrup gets tariffed, it's going to be collateral damage. I don't know if it's going to be super intentional. No offense to the maple industry. I don't know if there may be some people lobbying down in DC right now to have it part of the conversation. But yeah, it's been equipment, supplies, and then I think the real head scratcher from talking to the people I've talked to is just the components and the way that equipment's manufactured and stuff possibly even moves across the border a couple times in fabrication. So, or not fabrication, in putting things together. So not syrup, and then different pieces of equipment do have tariffs and some do not if they're direct food processing machinery. Great question. No syrup yet. No tariff
Okay.
on syrup yet.
And then similarly, along those lines, is there any federal government movement to support maple producers? For example, like the soybean farmers who are getting payments, anything like that, or is the industry too small to get help for some of those exchange rate prices?
That's great. Yeah, great question. Yeah, so the maple industry the U.S. maple industry has hopefully benefited from a track of USDA grants that have supported research and or promotion. 2018, the Ag Marketing Service initiated the ACER grant rounds. The grant rounds, so some of them have done different things. So the maple industry has potentially benefited from research and or promotional activities. There is not a direct payment program that I'm aware of that would be like a subsidy or a correction for maple specifically. That may be happening in other industries. Yeah, you mentioned soybean. I was in DC last year, like right before they started to announce the trade stuff, and they were already talking about sending direct payments to grain farmers and commodity farmers because they knew there'd be some damage. So I'm not aware of any direct payments for maple. Again, it's pretty small. One of the things that I'm aware of that also doesn't exist that I think is worth consideration is that Canada, Quebec included, they've got a number of risk management programs and resources specifically for the maple industry that are federally supported, sanctioned, or subsidized that don't exist in the United States. And I think it would be great, maybe it's a dream of mine because I'm a farm business specialist, if we talked a little bit about risk management and insurance policies, whether it's crop insurance or sort of capital recovery plans, if there's like storms damage. They also, I believe, have some operating credit opportunity. They have some opportunities to get access to operating credit at discounted interest rates through federally sanctioned credit access that's available in Canada. That's not something that maple producers in the U.S. have the benefit of. So there's a kind of a broader support network, I think, in Canada for the industry that is different and has possibly the potential, I think, to maybe alleviate some of the issues or challenges on the U.S. side. But I think would really need some serious investigation, not just from me, but from industry members to see if it could do some good. Great question.
Okay. And the next one is about labor. Are the large U.S. maple producers able to find adequate labor?
Well, they're finding it because they're producing it, but it's a tension. It's something. I know Mark Iselhart, maple specialist at UVM Extension. He usually goes like on maple tour every spring, and for a couple of years now, like that has often been one of the biggest issues for growing businesses is access to labor and possibly the constraint on expansion. So I do know that has been top of mind for many years. I just haven't collected that like discrete information in the past year or two to say this is like the number. but I do know it's on the mind. And this is, I think, just to mention a dynamic for maple, that a lot of maple businesses are still seasonal, and they can be operated by owners or with a small family, small number of people, seasonally and effectively, but possibly not as like a full-time business. And that's a little different than someone that wants to go into what I call commercial model, where they're either working in the woods and working on production and forestry all year long, or they're producing their crop and then selling syrup and dealing with processing, packaging, and marketing. And I think that's where maybe this labor problem is going to really start to arise, is if the business model requires people to expand or they want to get into marketing, are they going to be able to find the labor? And then taking that one step further, the question is going to be, what kind of labor force is needed? Do we need more people in the woods to produce syrup? And or are producers going to start trying to recruit hired paid labor to support marketing and sales, maybe if they're going to be trying to get more of that kind of direct marketing piece? So I'm going to say yes, labor's an issue, and kind of to be determined how each producer may navigate what labor looks like for them.
Okay, great. And then another question, are you seeing more producers entering the industry, or is some of that growth coming from current producers growing themselves?
That's a great question. I only have information right now on the survey right now. We're trying to study the expansion potential or the expansion sentiment from existing producers. So I'll have that kind of lens. I don't have that information about kind of how many new starts there are. And I'm just going to pause and try to think about if there's any scenarios when we were at the meeting in December in Randolph. One thing that did come up, I think SAP only operations came up again. I've talked about it, but I started to hear some more people talking about more startups considering just producing SAP. It's a lower cost investment. Also, possibly more flexible as just a seasonal thing without having to market the syrup. So I think there was agreement that does definitely hold some promise for starts. And then we do know that there's a lot of syrup processing capacity in the sugar houses and in the equipment that could be available. So that's a great question. I wish I had more information. Let's kind of make a note here, maybe talk to some equipment sellers and see equipment and tubing installers if they're seeing some traction from just new starts. Good question.
Great. And then, oh, looks like one actually just came in. Let's see. Okay. So another question is, any insight on the cost of production? You did talk about how it's kind of relevant for each producer, but any insight going into 2026 about that?
And I have got some ideas. We haven't done the financial benchmarking since 2021 is when we stopped working with that. We had a small cohort of producers. I could just kind of dial it back a little and say that, we work with some really larger scale operations, over 50, 60,000 taps. And for that profile in 2021, the last date we did it, not uncommon to have cost of production under $1.90 US per pound produced. Well, let's kind of assume there's been some inflation, so you can kind of factor 100, let's say a $1.90 a pound plus some factors to get from 2021 to 2026. And then our kind of general pool, we often saw the bulk producers around 230 to 240. That was 5 years ago, and I think that's kind of why I pull that inflation adjusted stuff up and do want to talk about prices. I think there's a pool of producers that are right in that middle, where if they were making syrup at 230 4 or 5 years ago, their cost of production is probably a little higher now. So that's a little bit. And then we talked about marketing. Once you start getting into selling, that cost of production really shifts, because the cost of a human being to really be a full-time marketer is really expensive. So we really sort of jump into like per gallon equivalents. So I guess I'll come back around. We haven't done that clinically since 2021. The assumption is the costs have gone up. and let's hope that some of the yields have gone up as well. But as a farm business planner working with farms, I'd love to see, love to see the prices continue to go up a little bit more to support that higher cost of production.
Okay, those are all the questions we have. So, in honor of everybody's times, we can wrap up there. Thank you so much, Mark. And just as a reminder, this webinar has been recorded, so the recording and Mark's slides will be available on our website. Thank you and have a great day.
Thanks for coming.